All right, after that slight break with the mic. I'm Laveena Iyer. I'm a global tech and telecoms analyst at Economist Intelligence, and I'd like to invite my panel, Rishabh Bhandari from Wells Fargo and Bryan Stirewalt from EY. So our next session is about artificial intelligence. We did touch upon a bit of it in yesterday's session, where we talked about the use cases, and today we're hoping to talk a little more about the regulation side of things. You can't talk about all the excitement without talking about a bit of restraint and control, given how this technology is evolving. So I like to use the phrase, the year of experimentation. 2023 was, so to say, the year of experimentation with AI, and 2024 has really been the year of implementation across industries, but finance has definitely been at the forefront of it, like with any other emerging technology. And I'm curious to know what are some of the thoughts of financial services companies, fintech companies, and regulators in particular when it comes to AI. But before that, Bryan, let's begin with you. What are some of the use cases that you have seen so far in the financial services sector that excite you and worry you?
I hope this is, there we go. Thank you, Laveena, and it's a real pleasure to be here, and hats off to the organizers for getting such a great group here and such a lively audience. There's always a lot of buzz in the fintech world, and there's even more buzz now in the AI world. So I think banking as an industry became a technology industry long ago. It just slowly has evolved. But it's become more and more digital over time, and the digital transformation journey now is well underway for a lot of institutions, and particularly now as they connect with fintech. So we're seeing a lot of, I think, really exciting use cases for artificial intelligence now, and some of them are both on kind of both sides of the balance sheet, we'll say, using a financial term. One example of that is fighting financial crime. So AI is incredible, I think, at pushing banks forward, being more effective in fighting financial crime. But it's not, in that application, it's not a choice. You really have to go to AI because the criminals have gone to AI. Yep. So on that journey is on both sides, but the AI journey there is incredibly exciting and incredibly useful. The customer onboarding process also is a very interesting element of AI. Risk management, expense control, robo-advice, portfolio management, all have incredible use cases because they're deep in data, and the AI element eliminates a lot of emotion and a lot of error. But on the risk side, then AI also brings potentially inherent biases. So there will be, without question, unintended, we'll say, negative consequences, unintended biases that come with it, and that's where regulators are worried.
You know, that's an interesting way of saying it, unintended consequences of artificial intelligence in finance. Rishabh, do you share similar concerns, you know, as you look at regulations and legal compliances at Wells Fargo? What are some of the risks that you foresee, and any adoption of AI in FinServ that has really made you wonder that it's time for guidelines, policies?
Yeah, sure. First of all, I'm really delighted to be here. It's a great event. I can feel the buzz. You know, really, you know, bringing talent together in one place is unique. I would echo a lot of what Bryan has said. You know, in terms of thinking about AI, I mean, clearly AI has, you know, the potential to harness scale, efficiencies, optimize processes, right? But on the other side of the balance sheet, there are obviously inherent risks to be navigated sensibly. I mean, I can think of, you know, a couple of key areas where use cases are in varying sort of stages of deployment. So one is customer experience. Second, we can talk about investment processes. And then we can talk about risk and compliance sort of environments. So, the customer experience, really thinking about how targeted a customer outreach could be, the robo-advisory aspect that Bryan mentioned, virtual assistants, all of that really acting as a first filter to improve the customer experience, be more targeted. What are the risks? The risks are your design and filtration doesn't quite work the way it should. Some biases are embedded, and that really has a distorting lens. So I think that's really important because, we had a panel earlier in the morning about diversity and inclusion, and we've got to also remember inclusion has to be the heart of customer experience as well. Then very quickly, like investment processes, I know firms who are thinking about embedding AI in portfolio management, decision making, in embedding AI in sales and trading, data analytics, execution and automation. Again, really great potential, but in the volatile environment that we live in, can these models adapt to geopolitical risks? Can they sort of really sort of pivot when we're seeing volatility in liquidity pools and so on, right? So inherently exclusive reliance has risks. And, again, in the risk and compliance environment, to the earlier point, really key, right? We know of cases in surveillance, onboarding, credit risk management, great potential, but really thinking about, navigating biases is the key.
So then, Rishabh, while companies want to not be left behind in the race of AI, what is the governance structure that fintech startups or financial services companies are putting in place? Could you talk a bit about what you're doing at Wells Fargo as you're experimenting or implementing AI?
I think, this is reputational risks are absolutely key to navigate here, right? We know there are opportunities, we know there's scale to harness, but we also know there is a reputation to protect, right? And that's key to firms, that's key to regulators. So I think it's very important to have a governance structure end to end, from design, proof of concept, to deployment, which is transparent internally, as well as with supervisors. I'm aware in the UK and, other regulators, including in the region, the idea of a regulatory sandbox is really important. Have a safe space where you're allowed to test an agile environment where you learn lessons and you move on. So I think, Laveena, to come back to your core question, getting the design and governance structure is absolutely critical to success. A front-to-back view with the business owners, the second line, and internal audit all working in lockstep. Everybody's got to be together. Absolutely.
So that's interesting to hear on the company side of things, but I'm curious to know on the regulator side, Bryan. You've been, prior to EY, you've also been with the Dubai FSA, and I think that experience is really handy to help us understand how should regulators be thinking about this, because every few months we're hearing about a new model, we're hearing about use cases. So what would be your recommendations to financial service regulators?
Yeah, and I would turn to one of the more interesting panels. They were all interesting yesterday, but one of the more interesting panels that I sat through yesterday was with Her Excellency and Richard Teng talking about talent. And AI is presenting, and technology is presenting new types of risks that aren't traditional outgrowths of banking. That it's not like somebody who's been here 10 years, in my regulator is going to be good at this step. So the first thing is, where do you hire people? and how do you maintain people who understand technology. And I have found in my experience, it's easier to bring a technology expert into a regulator and teach them something about regulation than it is to take a regulator and teach them something about technology. So that's the first step, is getting the right people involved. Once you've got the right people in the organization, then it's a public-private partnership, and we've heard about that discussion here today too, because regulators simply cannot be sitting behind their desk writing rules and slipping them out the door. By the time you've taken by the time it takes to write a regulation and get it passed, AI has already made that obsolete, almost without doubt. So you have to engage. Central Bank of Bahrain is great at engagement. They always have been. And so that's the next step. And when we talk about regulatory sandboxes, I mean, for AI, banks the size of Wells Fargo are now in a sandbox, experimenting with AI. You don't often think of HSBC, Wells Fargo, Deutsche Bank, DBS being in a sandbox, but that does provide that safe environment for them to test these ideas with actual customers to see what biases are coming out, and correct those biases before the switch goes on mainstream. So it's an exciting point, I think, for a exciting time for regulators. It's a scary time for regulators too, because they cannot really be in a position to lead. They just have to be in a position to be one step behind and not more.
Laveena,
Yes.
if I may, I think that's really key because, Bryan, what you said around collaboration, applies, obviously to public and private sector participants. But that collaboration between the supervisors, the regulators, and the firms is absolutely key. Just as I was talking about an end-to-end collaboration from a firm perspective, on the other side of the fence, if you're a regulator, you too have many divisions, you too have many departments with different mandates, from supervision to markets to enforcement, et cetera, et cetera. Everybody has to be on that journey together. So I think, to really get the best out of this opportunity, it's firms having the confidence to share experiences, and regulators, who may not be driving the innovation, being in the room to ask the right questions and then embed them in their supervision framework.
Correct. Because the last thing the regulator is going to want is when a set of loan customers we see are being denied in a systematic way, and a regulator goes to the bank and says, how does this algorithm work? And you say, I don't know, I just bought it. That's the wrong answer. So it has to be the governance side, I think, of AI has to be there. People have to understand what it's doing before you get to an enforcement case of what it did.
Yeah. Well, we've unfortunately not yet had a lot of legislation that's been formalized on AI, and understandably so. It's an evolving technology. But the EU's AI Act, which is pan-industry, is a really good benchmark. I think they've done a really good job previously with GDPR, a model that's been adopted across the globe, and I suspect a similar thing might happen with AI. I'm sure every country would like to pick bits and pieces that work for them, trying to not stifle innovation, but also regulate in a balanced manner. So, Rishabh, from an FS perspective particularly, which would be the core areas that regulators should be focused on when they're framing a legislation or even some kind of a policy guideline in the absence of a law?
Well, I'd say a couple of things, right? I mean, there is no universal answer to this, but thinking about the right principles, I think regulators, we don't want regulation to stifle innovation. I mean, that's got to be key. to end up in an over-regulated world, which is acting as a detriment to creativity, free thinking, expansion or choice, I think would be counterproductive. So, the question is, why are we regulating? That takes me to outcomes. So I think a key cornerstone here is, what outcomes are we trying to achieve? What outcomes are we trying to promote, right? Whether we're trying to promote, consumer choice, fairness to consumers or customers, really thinking in a more outcomes-focused direction, not at the cost of innovation, I think is key. So, to give you an example, in the UK, we've had the consumer duty come in. Now, that has a core set of principles which, have been relevant to, if you're in retail banking or retail financial services, that's directly relevant to you. But if you're still in a wholesale banking environment, that is still relevant. And what these principles really talk about are not controversial. Driving fair outcomes, thinking about firms' governance structures, thinking about manufacturing processes, value chains, thinking about root causes, clarity of communication with clients, helping them understand the risk. So, if you're thinking broad brush and really sort of applying them without stifling innovation, I think that for me is the key.
Well, I have a few more follow-up questions because I cover this. This is bread and butter for me. But if there's anyone in the audience who has a burning question on AI, then we could pass around the mic. Okay, in that case, I will ask another question. In FS, we're moving away very quickly from front-end facing applications, right? Predictive analysis is one application that's being explored in consumer goods and finance. How far are we really from using AI solely or in a big way for these applications in FS? And when I say how far are we, I mean in terms of customer confidence and also confidence at the banking level. Rishabh, if you could.
We're further along than we were on that spectrum, say, if you asked the question a couple of years ago, but we still have a long way to go. Yeah. I think we have yet to unlock the true potential where, really thinking about how this can be embedded in a robust framework without acting as a substitute for human decision making. Because I still believe, that you do need a 4 eyes check. Automation will take you, X many miles along the journey, but you need somebody to drive the car. That is key. And I also think, part of, being clear here is roles and responsibilities. And really this should be an environment where it's business as usual, just as firms are taking decisions for, all manner of things, and we're talking about who is accountable for that decision. And, in the UK and in many other jurisdictions, including in Asia, we've got executive accountability regimes that really underpin decision-making and dependencies, particularly for large global organizations, right? I think embedding that decision-making framework for AI, being clear who is accountable, who is dependent on whom, who is taking ownership is key to sort of moving forward on that journey. That would be my view.
Bryan, any thoughts to add before we close?
So I think, we're now in the AI journey at the excitement stage. We're about ready to enter a little bit more of a chaotic stage. I say that once these are put in place and people really didn't understand what it was going to do. And there will be unintended consequences that have to be corrected. So I would say in the next year or so, we're still excitement. In the 2 to 5 year category, we're going to go through a bit of chaos, which will lead then to more of a global standard for how these things are controlled. And then in the 5 to 7 year period, it will be fully implemented. And I think that's an exciting time.
It's exciting indeed, and I think it's a space that we should all be watching out for, because as the technology evolves, so will the regulation, and it will not be a uniform regulation, that's safe to say, across geographies. So yes, looking forward to that. With that, thank you very much, Bryan and Rishabh, for your time and your thoughts. Our speakers are available in the networking area if you'd like to have any follow-up conversations. Thank you.
Thank you.